The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard of goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is unknown. Expect the best. Believe something good is going to happen, and it usually will. Market-wise, let's take a look at it out here. We have the Dow Industrials up 85, NASDAQ up 25, S&P's up 7.5. Gold contract down $8.60, traded at $1,185 an ounce. Silver down 29 cents at $16.50 an ounce. Platinum down 9 at $1,103 an ounce. Light sweet crude off $1.55, trading out of $59.71 a barrel. Bonds, we have the 10-year down 27 ticks, 125.15, getting hammered. 30-year down two full points, monster move, 149.22. And King Dollar down 388 ticks at 95.49. That's after being up 500 ticks this morning, folks. King Dollar is toasted, roasted. Get the butter out, get the peanut butter and jelly out, get the whole ball of wax and put it on the toast and eat it. Euro up 102, trading out at 112.53. And the yen up 25 at 124.36. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We have some nice volatility out here today, folks. We've had two separate 12-point moves in the futures and the S&Ps. We got into the open. You know, the S&Ps are up there at 21.18. They smoked it down at the open, just as they did the last few days, down to 21.07. It crawls all the way back up, gets to a higher high, 21.20. Guess what? They smoke it all the way back down to 21.09. You do the counter trend bounce once again to 21.17, and I expect what you're going to see coming into this close here. It's going to just be a little replay because all the volume is still downtown. You know, 21.12 is game here. We're 21.14. We take a look at the... So that's the futures. You go into the SPY, there's really no movement in the SPY. The SPY right now, and one of the main reasons here, let me bring this up so you can see what's happening here. The SPY, basically from high to low out here, trading at 212.02. Bottom line, it went to 212.67, 212.11. As long as the SPY stays under 212.24, that's a failure. That's what it's coming down to. I suspect what you're going to... So that's your SPY. We look at the NQs. If we look at the futures first, what you're going to see... Let's use 1 second. What you're going to see inside the NASDAQ futures, same type of setup that was out here the last few days. The NASDAQ futures actually went to a low, the second spike down. Pretty amazing. So your first spike went from 40 down to 13. Then you climbed all the way back up to 38, and then you spiked down into 0.1. So it's going to be intriguing watching the NASDAQ futures. Right now they're at 23 to see how they're going to come into this lower level. I do expect you're going to see them come into the lower level. We'll see whether there's any force on that move. Plenty of time left in the marketplace, no doubt. Russell 2000. What do we have with the Russell 2000? What you have with the Russell 2000 is this. That little baby has not given it up. That is pushing into the high. Volume's not bad either. You did 23 million shares. It needs about 35 million, but it's pushing to the high with volume. And what is intriguing is that it's not like, you know, gold is down, the oil is down, the dollar is getting killed. In commodities in general, basically, I'm paying attention to the dollar right now because the only commodity that's up good is cotton, and that's up 2.4%. You have heating oil down at 2.6%. We have natural gas off 2.6. You got lean hogs down 1.5. Gold's down 0.75. Bottom line is that we go over and look at this dollar. The dollar, folks, is screaming for lower price. Now, check this out. This is pretty intense. The dollar index, we are trading right now at 95.50. It was up 500 ticks this morning, and it gave it up in spades. It's down 370 ticks right now with volume. We've done 74,000 contracts. Yesterday we did 86,000. It looks like we had a large ABC structure on the way down. The way this is looking right now, 90 is going to be coming at us. We'll see if... And 90 is a 1-to-1 ABC structure on the way down. You know, you can do a 1-to-1.382. You can do a 1-to-1.50. We'll see exactly what that wants to do. But what you do have is that you are coming down, and you are coming down with some big volume, folks. There's no doubt about it. And as one of our targets say, the market can't handle higher price. You know, that's the bottom line. No matter which way that you look at this, someone is... the thing that's intriguing is this, folks, is that operators themselves leave marks. You know, this morning I'm coming into work and I'm saying, you know, I'm talking to myself as usual, right? Because, you know, what ends up happening is that as you know what positions you're going to put on, what I like to do is say, okay, if this happens, that happens, I want to do this. If that happens, I'm going to do this, and vice versa, right? And so I'm thinking about the last couple days because the market has sold down the exact same way the last couple days. And I'm saying to myself, man, this is a monster operator, whoever this is. Because of the fact, folks, when you see large future sells, they're basically, they're throwing, you know, this morning they threw in, let's see. So this morning they threw in, yeah, you threw in 109,000 contracts, man. 109,000 contracts is big money. And then they, you know, they let it go all the way up again, and guess what? Then they threw in another 44,000 contracts. Everything that, more than likely, it's the same operator. And what tends to happen is that this operator is large, evidently, you know, and I was looking, I said, okay, can the same thing play out again? And so I was going through the bull and bear scenario in my own head. So the bear scenario is, yes, it can play out again. The bull scenario would be that is they pushing it all the way down just to pick up shares and then nail it up. Now, I don't expect that's it. The reason being because when we do get these highs, there's no one there. And what has happened is this. This is a market that they're actually going after because they let it come all the way up, let it crawl all the way up, and then whack it in a big way. So I expect, just like yesterday, you know, they're going to lay it out here. More than likely, when you see something like this, this is how, this is always hard to, there's no really proof in this, but this is how a really smart hedge fund manager would lay this out. You whack it down as you're whacking this down, folks. What you're doing is, of course, you're basically making money on the way down. As it's crawling all the way back up, what are you doing? As it's crawling all the way back up, you just keep pushing more stock, more stock, more stock out. You're ready again. You whack it all the way down again. Okay. That's the way this thing seems to be playing out, you know. And what you do have is this, is that the aspect of how this plays out, and I put this in my daily newsletter this morning, when you see something like this, normally what happens is this, that this can go on week, 2 weeks, whatever that is, and then all of a sudden, one of these days, then there's absolutely zero bids down at the bottom because some other operator also starts pushing on the thread. They've got out of enough equities themselves, they start pushing it lower. So we'll see where the whole thing does shake out. Let's go over to that gold market because what you do have is this. So picture this. We had the dollar get smoked yesterday. We had the dollar get smoked today. And, in fact, gold can't move. And in fact, today what they did is they took gold lower. So let's go look at it intraday first. So we take a look at it intraday, and what you're going to see as we came down, first leg down had some real juice on that leg. Okay, they took it from 1190 GCQ. They took it from 1190 down to 1180, and it has juice. You know, so bottom line is that that 1180 more than likely is going to get tested again because we have volume down there. It's crawled back up, but that'll get tested. Now that's the bear side. The bull side is if you bring this back a little, what you're also going to see is that we have volume at the highs out there from June 1st at 1202. This is Tom O'Brien. This is TFNN. Stay right there, folks. Coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are up 71. You get the Nasdaq up 20. S&Ps are up 5.5. And bottom line is that, as with one of our tigers, we're just talking about, that little trapdoor just opened. And there's no doubt, folks, you know, when you continue to basically push, today is a really intriguing day, man. You know, if you're a trader and out there, it's like heaven. But you know what's really wild? It's like, how the heck does this work? And I've been doing this for so many years, folks, okay? It's crazy. But when you get large ranges like this, it's just amazing, okay? If you haven't traded the Nadex product yet, come over to our website at TFNN, because I can tell you that product in itself, for a market like this, is phenomenal. Because, so check this out. This is what's really cool. Now, this is unusual that you're trading within 12 S&P points up and down. But it wouldn't matter, you know, on a longer term basis, meaning all day, if you were long or short, and you were trading either the S&Ps or the NASDAQ 100. You know, I happen to like the NASDAQ 100. We've been trading it a lot. The reason being is that the tick value is just amazing, meaning the spread is just, when the spread is in the middle, folks, okay, you're paying 1 point of premium and that's it. And what the difference is, however, is that you have defined risk and you can have more leverage with defined risk. And that's when you can have more leverage with defined risk, it's a huge deal. Bottom line, go to our website at TFNN to see the banner on the top, on the side, pull it up, you know, check it out. They'll put $25,000 of paper money into your account. You can start getting used to see how these trades. There's a lot of great videos right on that site to check it out. Don't forget also that at TFNN, we do live programming 10 hours a day. We start at 8 o'clock in the morning. We got a new lineup out here. Our man, Mr. John Logan, starts us off at 8. Larry Pesavento at 9. I'm at 10. We get Basil Chapman at 11. We get Thinkorswim at 12. We get Steve Rhodes at 1. We got our man David White at 2. And then we come back at 3. And Andy Hecht at 5. Okay, so get a lot of great program out there, a lot of great traders out there, a lot of great ideas out there. If you're looking for them and you're looking for something fast and furious, you get it all. It's not just fast and furious. What does tend to happen, I haven't done a morning show for a while. The morning shows are great because what ends up happening is that simultaneously, when you're trading, of course, when I'm doing the show, well, I have to be doing both. So it's a little bit different, that's for sure. Meaning listening, it may be a little bit different because there's a few different pauses. But bottom line is that at least you're getting an understanding of where not only that I think the market is going, but tick for tick, what is happening on this basis. Now, this is a perfect market for that. That's what's also going on. Let's go over and take a look at GOLD, which is Rheingold Resources. Now, the reason we're looking at Rheingold is this. Inside the gold market, the gold market is trying to get up and over the downdraft from the 26th of May. Rheingold was one of the best indications that it wanted to do that. That got to a price point yesterday of $73.69. Bottom line is giving it up today, and you had some juice giving it up, which is going to be dangerous for us tomorrow morning. We've done 414,000, so that's saying, number one, that Rheingold's going to go on and get into the $70.56. How we get into that is going to be important because you can make the case that this could be an ABC structure on the way down. So this is going to be a little dangerous move here, how we attack that swing point at 70.56. And in the way that is setting up, it looks like that we'll more likely attack that tomorrow. If we go over, now watch this. This is phenomenal. This deal here, it will absolutely blow your mind. Okay, so check this out. We're going to go into the bond market. And this bond market, folks, excuse me, folks, is big problems. It's an ABC structure on the way down. So if we take a look at the 30-year first, what you have, your A point is 65, your B is 49, so you get 15 bucks, 16 bucks. That's saying that we're going to 140. And right now we're at 149.10. The 10-year also is doing an ABC structure on the way down. This is what you have with the 10-year. The A point on the 10-year is 130. Your B is 126. You get 4 bucks. That's how you're going to 124. You know, both of them, USU. 1 second. I gave you the last contract. Now, this is, no, TYU. Okay, so there it is. So the 10-year also, we got 129, 4 bucks still. 123.23. Well, the 10-year's done 1.6 million contracts out here today. It's taken out at swing point, taking it out with volume. You know, the fast moves. So there's a few little disconnects inside the market right now. And what it would be is this, is that you'd think that with the way that the bond goes south quickly, that the dollar would get stronger, but the dollar's basically history too. So it's going to be like, okay, so if that's out there, what is basically lurking in those shadows out there? I suspect there's probably nothing lurking in the shadows. The market's just overvalued. But what will happen, because of the fast moves inside the currencies and inside the bond market, someone's going to end up blowing up, meaning one of these big funds will end up blowing up. What ends up happening then? Well, when one fund blows up, the dominoes go, the chips go, the whole ball of wax. That's what you're seeing inside this high volatility market also. You know, fast moves like this, folks, in the bond market are not good. If we take a look at the 20-year plus the TLT structure, if you're trading the equities, you're going to see it is a sweet ABC structure on the way down. It's a big one, too. Your A point on the TLT is 131. Your B is 118, so you got 18.28. We got 13 bucks, right? Your C is 123. That's going to give you $1.10. And right now, we're $1.17. Now, remember something, too. An A to B, C to D structure, an ABC structure on the way down and on the way up are straight line moves. So what that means is that we have started the C to D. We're third day into the C to D. Well, guess what? You can just basically barrel down for a few more days. The setup here is kind of neat. That could actually happen because you got to remember we're in summer trading. Summer trading, what ends up happening is you get Tuesday, Wednesday, and Thursday to get volume inside the marketplace. Now, we've had that. When you get something like that, what that does do is gets everyone a heads up that, oh my God, on Friday, you can absolutely get volume in the marketplace. Again, the reason you can get it in on Friday is that people have to pay attention to the marketplace. So this is going to be a huge week all around how we come into the end of the week, because so there's the bearish case. The bullish case is that when you actually look at this market, we haven't moved. We haven't moved, and we haven't moved since February 19th. That's kind of how we're set up. We're set up here, but we haven't moved since February 19th. What you do have, however, watch this. If we look at this, let's look at this today, as to the percentage of ups versus downs. What we still continue to have is that the stocks that are blowing up, folks, are going down much further than the little rocket ships on either the takeovers or, folks, just equities that are going higher. This is Tom O'Brien. This is TFNN. You stay right there. We're coming right back. Dow's up 72. Nasdaq's up 20. S&Ps are up 5.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, Life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's hard to believe that it's been almost 2 years since Andy Hecht started his newsletter, The Technomental Commodity Report. In that time, he's delivered many winning trades for his subscribers. To commemorate Andy's 100th weekly issue of his newsletter, we're rolling back the monthly price to the introductory rate of only $59. This is a one-of-a-kind special that is only around until Thursday of this week, which is the day of his 100th issue. By taking advantage of this 100th issue special, you can lock in Andy's original introductory rate for as long as you remain a subscriber. That's an incredible 25% savings every month off the retail price. Andy delivers in-depth analysis of the commodity market every Thursday in each issue of the Technomental Commodity Report, while providing specific trading recommendations on ETFs and option positions within the commodity market. Don't miss out on this special, as there are only hours remaining. Sign up for the Technomental Commodity Report right now at the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment, with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get American Express is up 65 cents. You have Coke down 13. Oxy is down 93. We have Honeywell up 32. Big Blue is up 40 cents rather. Hewlett Packard is up 8. Now, inside the Dow Industrials, folks, what's putting strength inside the Dow Industrials out here today is you have Home Depot. Home Depot is up $1.72. you have JP Morgan Chase up 80 cents, Goldman Sachs is up 2.42, and United Technologies is up $1.30. Taken away from it on the way down, and by the way, when we were up 150 earlier, there were only 2 stocks that were negative inside the Dow Industrials, and now there are more, of course. But you have Intel that's dragging it down. That's down 67 cents at 32 bucks. We have Chevron off 34 cents. Pfizer is down 10, and Coca-Cola is down 13. Inside the NDX 100, what do we have? The strength versus the weakness. The strength inside the NDX 100 today, the NDX 100 is up $10, 10.39. The strength is C.H. Robinson. That's up $3.22. Now, check this out, because it was really intriguing. Listening to some financial media earlier in the day, they were talking about C.H. Robinson is on a tear. Well, it's on a tear, folks, because the stock has just came from $77 down to $61 nonstop, okay? Now, yeah, it has a counter-trend bounce with 0 volume. Here, let me show you this, because this is pretty cool, how this shakes out. Watch this. CHRW. Okay. So when we take a look at this, what you're going to see, I'll put this on a daily, and what you're seeing is that you come off the highs of the 77 bucks, straight down. Well, what we're doing right now, we're just coming into ICE. ICE is set up at $64.01 here, at $64.52. You're going up with 821,000. Guess what? We went down, folks, with 5.7 million. All of that is about right there is a dead cat bounce, and that dead cat bounce is pretty extraordinary, meaning it's going to be toasted, roasted. More than likely, you have an ABC structure on the way down. So that's the leader right now in the NDX 100. Expedia International, that is up 183. You get Viacom up 210, and we have Facebook up 196. Those are the leaders inside the NASDAQ 100. Taking it down, you get Charter Communications. That's off $4.86. Micron Tech is down 70. We have Liberty Global down 115, and Intel is off 65. Let's go over to Micron. You know, the chip stocks have been getting hit, and they seem to, you know, they had a decent counter-trend bounce. And once these things start getting hit again, man, this is a situation that these things want to go lower. I mean, a big time. You know, Micron has already gone from 36 down to 27. The way this looks like right now is that this baby is lined up to get into a price point of $18. And right now we're at 27. So if you, that is a big hit for an equity that, you know, it came off the bottom. Micron came off the bottom in 2012 at $5 and it ran really fast to 36. The trapdoor, however, is opened, and you talk about the way down. The way down is pretty incredible. There's no two ways about that. Small caps, the small caps are hanging tough. And, you know, the small caps are always harder to find out, okay, what is the movement inside the small caps? I mean, you can bisect and dissect, and I'll have it tonight, but intraday, I mean, that is a different momentum type of deal because of the weighting structure. That's all what it really has to do with. But the small caps are saying, hey, guess what? I'm going to go to the high. You know, I don't think the other indices are going to be able to handle the price right now, because I do expect what we are going to see is that we're still going to see some selling coming into this close out here. You know, but bottom line, volume, let's go take a look at the volume out here. What we have on the NYSE, NYSE is going to hit around 650 million. Inside the NASDAQ, you're going to be hitting about 1.9 billion. And the composite itself, if we look at the NASDAQ composite, the composite got to a price point today of 51.14. Let's see, would that be 51.06? This is interesting. So the closing high in the composite was May 27th. That we closed 5106.59. I believe that's not only the closing high, that actually closed higher than when we had the close in the composite, what, 15 years ago? 20 years ago? Let's go, 15 years ago, I think. Because what happened 15 years ago, yeah, March of 2000. So what you had there is that the composite did hit 132, 132, but it didn't close there. So, you know, this is a classic that you're going up, you're touching it, you're giving it up. The volume characteristic is like dramatically. There's dramatically less people in the market trying to buy the product, which is pretty wild, by the way, because you would figure 15 years later that you should be able to gather more people inside the marketplace in order to basically, you know, there are more people on Earth, period. Bottom line, though, guess what? There's not more people that are buying someone else's equities that have been hanging up there for that amount of time. So that amount of time was pretty incredible when you actually do look at that structure and how that shakes out. Inside, we go back to the gold market for a second. The GLD, now the GLD, folks, of course, is 10% of the price of gold. The GLD came down today with 4.2 million. Now, the GLD, bottom line, had rejected lower price. So this is going to be intriguing watching this thing shake out, because we had just brought up Rheingold Resources. Now, Rheingold didn't look good. And Rheingold itself, like, you know, you can get some really good clues as to what's going on in the gold market and in the gold equities by looking at Rheingold. So Rheingold is saying, hey, guess what? It couldn't handle the gap. It's going to try to handle the lower swing point. Well, the Street Tracks Trust handled the swing point today and did it and rejected it. We come into the low that was established out here last week. That low is 113.21. The volume that we had down there at the 113.21 is 5.2 million. We came down today. We got down to 113.08, and we've only done 4.2 million and rejected price. So that is dynamite. You know, I expect what we are going to see, though, we are going to see some heavy volatility Thursday and Friday in this marketplace. You know, Friday is always volatile inside the gold market, period. With the movement of this dollar, the movement of the dollar is deviant, number one, but what it also is that what's going to be right? Is the move on the dollar lower, saying it's going to reject lower price and go higher? That's why commodities continue to get hit. Or is it just the opposite? My take, of course, is the opposite, but you want to play with that whole scenario. Let's go over to oil for a second out here. So the reason we want to go to oil, and this is where what I love about the commodity markets in general, and the gold market in particular, is that you can get over and you can take a look at other commodities to get an understanding that, okay, you know, what is really happening here. So oil, it's not the end of the world. Oil's down $1.62. We've done 350,000 contracts, but that 350,000 contracts is going into the strength that it had on the 29th of May. We had done 452,000. So the way that set it up is that, yeah, you know, this can pull all the way back to 57.72, but you pull back there at lighter volume, that just means that it's building cause to get up, over, into, and very well maybe an ABC structure on the way up, breaking out of that 62, going into, if it's going to be an ABC, it's a big one, because 47, 46 is the A. Your B is up here at 63. So you get 47, 57, man, okay. You get 25 bucks. That'll give you a 76. That would be wild. Now that would go along, you know, by the way, that would go along with the correlation if in fact we're going to have that correlation, have the dollar index doing an ABC structure on the way down. You know, that's basically kind of a clear correlation as we look at that. The S&Ps, they're hanging tough here at the 2113 area. We'll see whether they are going to basically go after that low. The low inside that S&P out here today, folks, is she hit, last, is it right there? No, this is a daily. Okay. Yeah, so the low out here today is 06, and right now we're at 13. Plenty of time left. There's no doubt about that. You know, 15 minutes. 15 minutes, not in all markets. Normally, 15 minutes in a market is, you know, if we look back the last 2 or 3 months, That's not a big deal. When you get a day like today that we've had 2 separate downdrafts of each in the S&P, each one of those downdrafts being 12 S&P points, yeah, that's a big deal. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow right now is up 77. The Nasdaq's up 23. S&Ps are up 6.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now up 67. You get the Nasdaq up 21. S&P's up 4.5. And you can expect a bit more selling. We commit to this close because once they can get it going a bit, the Dow is up as much as 140, 150 today. We're at 67. You get 10 minutes left. We'll see where they can jam this baby. When we talk about bonds, folks, the 10-year right now is yielding 2.373. Now, what that does, you know, if you need a mortgage, you want to refinance, do all of the above, go do it. Because what we do know now is that the 10 and the 30-year, they both took out the B point and they took it out with volume. So what that means is that you're going to see the 10-year, which the 30-year mortgage market is based on, get up to higher price. Right now we're at 2.375, which is not the end of the world, by the way. 2.375 is still going to get you a mortgage at approximately 4%. How much more is it going to go? Yeah, it can go 4.25, you know, even when the ABC structure finishes. So that's not the end of the world either. But guess what? You need a mortgage, you're going to refinance, do it now, okay? Because it looks like the marketplace versus the Fed actually going to basically start pushing the thread on rates and pushing it higher. And, you know, the market itself, the bond market, you know, has taken conniptions. There's no doubt about that. The dollar has, but S&Ps, they haven't done anything yet. It is absolutely thrown volatility into the marketplace. That's what it absolutely has done. My take is that the Fed probably will still stay at zero. That's what's so really wild about this whole deal, shaking out, how it shakes out. Because they have no real reason to go up at this particular point. They keep claiming that they're going to go up, they're going to go up. I suspect what we're going to have by the time September rolls around is that you're going to have a market going into October. September is normally the worst month in the marketplace, folks. Even when you have a good year, September basically you're going to have a pullback. The way this market is setting up right now, because we've been at the highs for so long, any type of a dip coming into the summer is dangerous. The reason that a dip into the summer is dangerous has to do with the fact that you get a lot of people that are on vacation. And those large funds, when they're on vacation, you know, if they start seeing a highly volatile market, your probability goes up somewhat, not dramatically, that they're going to start selling. And the reason it would, if this was a market before 5 years ago, you know, I would say that no, there's a big probability to sell. What has happened because every one of these dips have worked, that'll be a little bit different this time, you know, because what has happened, no doubt, is that each time the dip has come in, if they bought it or they haven't got out, that's reinforced the aspect that, hey, guess what? Buy it, hold it, keep it, put it away, and everything's going to be cool, you know. That is not a long-term strategy, but guess what? That has been a long-term strategy, and since 2007, it's worked very well. It's hard to believe that we're in 2015. It's like when you fast forward, I'm fast forwarding saying, man, the last 7 years, like, where did they go? How fast did they go? They were fast, they were furious, and you blinked. And bottom line, that, hey, guess where? We're here. We're 2015, coming to the summer of 2015. And, you know, hopefully it's going to be a great weekend for everyone out here. It's certainly a great weekend down in Florida. It's hard to believe, folks. Normally in Florida, what happens is this, is that the Memorial Day weekend is normally, you still can breathe in Florida. After that, the heat really comes in dramatically. And boy, before that, the humidity normally comes in. We've got, you know, a week or two with humidity about a month ago. It's gorgeous out right now. It's like 85. And what that has to do with, I heard some of the weather up the Northeast today, it has to do with it's so cold up the Northeast. You know, so that is pretty wild, how that whole thing is at this particular point, you know. And hey, we'll take this weather this week. That would be just absolutely awesome. There's no doubt about it. We're coming into this. Let's see. So market looks like it's going to just flatten out here. What you will have, though, the way this market is set up right now is that the SPY bottom line, anything under. So your benchmark inside the SPX is 2119.59. We made it up to 2121 today. So what's intriguing about that, this was another failure inside the SPY. And every time that you fail, folks, you lose more strength. And where I'm going with that is this, is that going back into the high from February 25th. That's the number you want to look for. The February 25th high is out there, 2119.59. We got over that today. You closed underneath it. What that sets up is, guess what? Another failure coming into this market, you know, next couple days. What I do expect you're going to see is you're going to see some selling. If we take a look at the DAX, what was intriguing out here today at the DAX, you know, got up to 11,515 and couldn't handle that price either. You know, the DAX in Germany basically looks like it's building some cause to trying to break the 1167 floor. You know, we'll see if the 167 floor, rather, it's 11,167. You've been building some cause there. Came down with some real juice. The DAX came down with 124 million. That seems like anemic compared to our markets, but that, in fact, is not anemic. What that is, that's kind of, their markets are a lot smaller than our markets. When you go to China, everything you're dealing with in China, folks, is in the billions. So it's pretty wild watching the whole Chinese market versus our market versus the European markets. The Dow, whoever they're selling inside the Dow, you know, it's amazing. The Dow, they've been really pushing around in a big way. There's no two ways about that. You know, the Dow is up $1.50 today. It's up $60 right now. Can't handle $60 either. So the price structure, the price weighting structure inside the Dow is important to wrap your head around. The reason being, of course, is that you don't need a lot of Dow stocks to go south. All you need is a couple larger ones going south, and what that does is that that puts that price point down pretty quickly. If we take a look at the NASDAQ futures coming into the close here, bottom line, the seller's back. We get a big expansion with volume, and these futures don't close, of course, until 4:15, but you get an expansion of volume as it's pushing into this 4.517 area. And the push actually is larger than it was when it went down to 45.11 at 12:50 this afternoon. So I expect what you're going to see as this market closes. Futures get 15 minutes, but it's going to push into that low out there. Dow right now is up 60, Nasdaq's up 20, S&Ps are up 5.5. You stay right there, folks. We're going to be coming back with some numbers after the close. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is by Walter Anderson. You know, it's wild. Maybe, I think Walter Anderson, wasn't in Breaking Bad, wasn't that guy's name Walter Anderson too? I think it was. Believe in something big. Your life is worth a noble motive. Market-wise, let's take a look at it out here. We had the Dow Industrials finished up 64, NASDAQ up 19, S&P's up 7.5. Gold contract down $8.70, traded at $1,185 an ounce. Silver down 29 cents at $16.50 an ounce. Platinum down 11, trading out at $1,103 an ounce. You have copper flat at $2.72 a pound. Light sweet crude off $1.59, $59.67 a barrel. Bonds. The bond market, folks, is doing an ABC structure on the way down. If you need a mortgage, you're going to refinance, go do it. You get the 10-year right now trading at 2.3. That means you're going to be running about a 3.9 to 4 30-year mortgage. Do it. Do it now. 10-year down 27 ticks at 125.14. 30-year off 2 full points and 1 tick at 149.24. And King Dollar. King Dollar down 518 ticks, trading at 95.36. Now, King Dollar, folks, had been up 500 ticks this morning. King Dollar got toasted, roasted, all the above, gave up the 500 ticks, come down another 500 ticks. It looks to me like King Dollar is also an ABC structure on the way down. We're at 95.36 right now. 90 would be the number. We'll see whether it wants to get into that 88. King Dollar did monster volume once again today. Euro is up $1.20 at 121.71, and the yen is down up rather 14 at 124.25. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Walter White. Thank you, Walter White. Awesome. I wonder if he's related to Dave. Maybe it's Dave's brother. Okay, let's go take a look at the S&Ps out here. If we take a look at the SPYs, folks, this is what we have with the SPYs. SPYs, no movement out here today at all. They're still, what you did have with the SPY and the cash S&P, you had a failure on price, you had a failure on volume. You got to a price point today of 21.21. The first high that was generated out here, which was on February 25th, that's the benchmark that I'm using. It's 21.19. Bottom line, you get over it, close underneath it again. No juice behind the move. And what you have up here, folks, is this. You know, here, I'll give you both cases, the bull and bear case. The bull case first. The bull case, this is how, when you stay at highs, like we have, your probability is high that you are going to break higher and you'll actually have juice behind the move. Now, we've been at the same place since February 25th. So yeah, that's your bull case, because no matter how, you know, what I like to see, if you have the out of time to trade, I like to see how you're pushing into the swings. And we're certainly not pushing into swing highs with volume. But bottom line, the longer you stay there, more probability is that you can break higher. So that's the bull case. The bear case is that each and every time, because now we have a consolidation also, you know, the highs of where we are right now is at the 212, 211. The lows at 204. Well, where all the volume is, if we put up two channel lines, one channel line at the very top of 211 and a separate one down at the bottom of 204, what you're going to see is that each and every time that you are up at these highs, there's no demand in the marketplace for equities. There's no one that's buying equities. Everyone's trying to sell them. As you go down, there's huge demand to get out of the marketplace, and the door is not wide enough. Each and every time that we start any type of acceleration down, bottom line is that the trap door opens and, you know, price disappears. So picture with price. This is how trap doors open too, by the way, folks. So you have a bid, that's what someone, you know, and an offer, right? What happens when trap doors open, the bids go away. You know, they literally go away. I've seen them a few times literally go away, whether it's, you know, 2 points, 3 points, 4 points down. You know, when inside the futures market on the very large downdrafts, you know, they will get away from that market by an extraordinary amount. Bottom line, that's the type of market that we have right now. You had a failure out there. If we look at the NDX 100, now the NDX 100 is still the strongest market out here. And what we do have, that was a sideways market out here today. We're at a price point of 110.40. We did 19 million shares, and that 19 million shares is going against 30 million. Can't get anywhere. Now, what we are is that we are into the high volume, well, not high volume, Bob, we're into the high bar. That high that was generated inside the QQQs was the 27th. The low of that day was 110.02, the high 111.16. So, we'll see whether it can go after it. Thus far, it hasn't been able to get that type of traction. And what we did have intraday today is that you had two huge moves on the way down, 12-point S&P moves intraday. If we go over the IWM, a little different story. The small caps, bottom line is that you got into and over the swing point of 125.46, and you have the juice behind the move. So small caps are going to make another run for the highs out here. That means he's going to make a run for this 126.91. We'll see how that handles it, but that's the way it's set up at this particular point. Gold, we need some real strength in gold. What we have with gold is this. Now, this is with the dollar down, too, folks. Gold did reject lower price out here. The divergence is that, okay, why can't gold get going when the dollar got toasted and roasted the last 2 days? Well, we'll see. Gold got to a price point today of 11.79. We closed out at 11.85. And 11.85 keeps it in the range, because 11.80 is the number down there. What I would like to see is gold get into and over this 12.08 area. The 12.08 area is that May 26th area. So May 26th, we came down from 12.08 to 11.85. That's what gold is trying to do right now. It's trying to get up and over that. Coming into Thursday, Friday, you can expect more volatility. Bond market, as we said, bonds are just in... Well, it depends whether they're in trouble. We are going lower price, higher yield. The TLT broke a B point today, broke it with volume. It's a monster ABC structure on the way down. The TLT, the A point on this is 132. The B is 118. So you get big numbers there. You get, what, 15 bucks? The C point is 123. Was that right? Let me see. Yeah, that's right. 132 to 118. Yeah, 28. Yeah, you get 15 bucks or 14 bucks. That's going to get you out at the 110 mark. TBT. Oh, this is going to get interesting here. So watch this, folks, okay? Your direction share, TBT, which is the pro share 2 times levered position. That little baby is doing a ABC structure up. Almost didn't take it out with volume. What you're going to have is that your direction 3 times is doing an ABC structure up. There's going to be a lot of action out here in a big way. There's no doubt about this. Yeah, big movement, big movement. It's huge. Now, let's go take a look at good old King Dollar. So King Dollar also is an ABC structure on the way down. King Dollar has all the makings and has been hitting all these fib numbers in such an incredible way. It's amazing, actually. And that's right from how it had made a high on March 12th. March 13th, rather. Is it March 13th? Yeah, March 13th. When we had made that high in King Dollar, dollar index, the whole world thought dollar was going to go to heaven, right? Bottom line, dollar had been going up, folks, since last July. Okay? Went from 80 to 100. That's a monster move. Now, doors open, you go straight down from 100 to 93. You do a counter trend bounce up to 97.5. And now volume blows out of it again. We're going into the swing point number 1, which is 93. More than likely, you're going to go lower. We're going to be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 64, NASDAQ up 22, S&P's up 9.5. And don't forget, folks, at TFNN, we do 10 hours of live programming every trading day, 8 in the morning to 6 in the evening. Our man, Mr. Andy Hecht, has an outstanding show every Tuesday and Thursday, 5 to 6 Eastern Standard Time, right after my show. And he also has a celebration that's happening. We at TFNN have a celebration happening. And what the celebration is, folks, it's his 100th issue celebration. It's the 100th issue of the Technomento Commodity Report. This is coming out this Thursday. And for that celebration, what we're doing is that right now the report is $79 a month. If you would like to get this report at the introductory price when he started, you can get it for the next 48 hours. That's it. You have today, you have tomorrow, at $59 a month. It's an outstanding report. Andy puts the technicals together with the fundamentals inside this commodity report. And, of course, you don't have to be, because the way commodities trade now, you don't have to be in the futures market to trade commodities because there's so many ETNs and ETF structures that mimic the actual future commodity market. Andy Heck, what's going on?
Hey, Tom, how are you? It's good to talk to you on a Wednesday.
I know, man. Well, I'd be doing a lot better if gold just went up like $50, man. The dollar got trashed again.
A lot of divergences, man. It's not just gold; it's copper, it's silver,
listen,
oil.
And oil.
It's amazing.
No, man.
Hey, eventually there's going to be a lagged effect. Either the dollar's wrong or the commodities are wrong.
Yeah,
we're going to find out in the next couple of days.
No, yeah, there's no doubt. And the dollar came down with some real strength, folks. I mean, you're talking about as you would say, the elevator down was quick, man. I mean,
absolutely, and to that effect, today, the subscribers to my Technomental Commodity Report, we took profits actually on a trade that we put on in the dollar months ago. We took 142% profit on one position, and we also closed out. You'll be happy about this one. We closed out our short position in gold. We only made 1 3/4%.
Okay,
but I thought it was prudent to close it down given what was going on in the dollar. And right now, Tom, I'm working on. There will be 3 new trade recommendations in tomorrow's 100th edition of the Technomental Commodity Report, which I see very low risk, high reward type trades. So I urge everyone to sign up at this reduced price.
No doubt. And, you know, the way you sign up, folks, come over to our website at TFNN, and you're going to see it right in the front page. It's a pretty cool graphic, too, man. I love that graphic, man. 100. That's amazing, actually.
Yeah, it is. It's quite amazing. Time flies. Hey, I'm coming up also on my 200th show, and since I only do the show twice a week, you know, that's 2 years, man. It's it goes fast. It goes fast.
That's so crazy, man.
Yeah. So let me tell you, these markets are a little bit bizarre here. I was looking, I've been looking and searching for trades and stuff today, looking around, and I'm just seeing so many divergences set up. Everything is extending. You got platinum $83 under gold. You got the gold silver ratio up at the moon. You've got the dollar tanking and commodity prices going down today. I know what's going on here. A lot of divergence there. The coffee is kind of working for us. I mean, we put some trades on there in the Technomental Commodity Report, and that's kind of back up to around 134. So that's doing
what is that ETF in coffee?
The JO.
That's right. JO. Oh, cool.
There's also another one called Cafe, but it's less liquid.
That is some volume. 217,000. That's pretty cool.
Yeah, it's got some juice to it. I mean, no question.
What's interesting here? I mean, this is something to talk about too. It's interesting too, folks, because what happens is that it's hard to get liquidity, inside new ETF structures. Not that this is new, but this has a market cap of 170 million, but that's some good volume, man. Okay.
Absolutely. Yeah. And actually next week, not tomorrow on the show, but next Tuesday on the show, I'm going to have a guest. I'm going to have the founder of the Teucrium family of ETFs, and what they do is they do the ETFs for corn and soybeans and wheat. And very interesting at this point. This guy Sal Gilberti, really interesting guy. He contacted me through actually a couple of articles I wrote for Seeking Alpha, and I asked him to come on the show. He's going to spend the hour with me, and we're going to talk about grain markets on Tuesday. So that should be cool. And the other thing is, did you check out my Jamie Dimon piece today?
Oh, I haven't yet. I got to do that.
Oh, check it out. I told you it was inspired by you. It was inspired by your editorial rant last week.
Yeah.
And actually, I'm getting a lot of back and forth comments from those who support Mr. Dimon and from those who don't. But my bottom line on the situation is, hey, have a little humble nature, be a little humble, and act accordingly, given the situation that your bank has been in and the fines that you've paid. his comments were I thought demonstrated a tremendous amount of hubris, which I think is probably not well advised in his position at this time, particularly aimed at his shareholders, who, Tom, are his bosses.
Oh, listen, the arrogance is unbelievable. It's pure arrogance. I mean, listen, they got away with everything, and they know they're going to continue. If they, folks, the bottom line is that the banks made it over this downdraft. You still hear out there that, oh, it wasn't the bank's fault, it was the government's fault, it was Fannie Mae and Freddie Mac. Bottom line, folks, okay, it was absolutely monster fraud, okay? Now, the fraud also had to do with the citizens, okay? There's plenty of citizens that turn around and say, hey, I make this, I make that. There's not discounting that. But the bottom line is that compliance-wise, those broker-dealers, those banks knew they were selling fraudulent paper to pension funds, government funds, people like you and me, everyone. I didn't buy any paper, but the bottom line is that monster. I don't even want to think how they would throw the oh my God, it's sick. It's absolutely sick.
I had a comment on the article on Seeking Alpha, you know, someone really defending Jamie Dimon. And I said to the guy, I wrote back, I said, look, you know, you got to balance how good, he's a good manager. I'm not disputing that at all. He is a good manager. Yeah. But, you know, how much in fines were paid? You know, you have to balance the amount of opportunity loss you have on those shares with the, you know, through the fines that were paid to how good a manager he is, and then kind of come out with a positive or negative on him. My point of the article is that he, you know, it's called diamond in the rough. Yeah. That, you know, he's a rough diamond. He's not, he really is not a smooth talking CEO, and he really has to have a little bit of a humble nature when it comes to, particularly to dealing with his shareholders, who are his bosses.
Yeah. Well,
so, check it out when you get a chance.
Oh, listen, man, I can't wait to check it out. My take on the whole situation, you know what blows my mind? The biggest part that blows my mind, folks, and this is just not on the banks. This is something to keep your head wrapped around. What I've found in life is that many times the people that are absolutely getting screwed the most, right, end up trying to protect parts of the bureaucracy of the government because they're so brainwashed that they don't realize that they're getting the shaft more than anyone. And it's like, blows my mind. And
listen, the other thing is you have to understand, Tom, it takes a tremendous amount of ego and hubris to climb the corporate ladder in a bank like JP Morgan. So it's a certain personality type.
Oh, listen, the biggest financial business, the politics business, they're probably the best, the brightest, and the meanest.
Absolutely.
Have a great one, man. Have a safe one, Andy.
Take care, bud. See you soon.
Stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow finish up 64, NASDAQ up 22, S&P's up 9.5. Let's go to Tim in Orlando. Hey, Tim, what's going on?
Hey, Tom, how are you?
Doing great, man. You having a good day out there?
Yeah, not too bad, not too bad. Hey, I've been away for a while, and I just wanted to just check back in and see. I don't know if you still have 850 as a target on the long term on the S&P to a pullback, or if you had adjusted that.
So the S&P right now, we're trading at 2116. Well, if you haven't been around for a while, the S&P hasn't moved anywhere since February 25th.
Right.
So, you know, before anything, we're going to have to get down, I guess, to 2030.
Okay.
You know?
All right. Now, so, I mean, are you still looking for a big, big pullback, or, you know, with QE somewhere in, like I said, I've been away for a couple of years. Have you readjusted maybe some of the things that you talked about through 2010, 2012? Because you guys were spot on in 08, 07, and 08.
No.
And then, obviously, QE has kind of messed up technical analysis and charting for everybody. So,
well, what happens is this, is that what the S&P does have, right, the first high probability target for me right now inside the S&P is the October 2014 level. So we're 2114. The high of that is 1912. The low of that is 1820. Now, that level in itself, that's pretty intense, okay?
Yeah, no, that was a big pullback in October.
That's a big pullback in October. Now, what has happened is that there's many large caps that have already hit that and come back pretty dramatically. If we go over to the transports, what you're going to see is that the transports are $100 away from that. You know, the transports just came down from 9,300 to 8,500. The top of that number is 81.69. So we'll see how we get into that number and when we get into that number with the S&P. That in itself, you know, is going to freak some people out.
Sure. Okay.
Now, no, let's just keep going, because this is where this gets really wild, folks. Is that, you know, he brought up the 850. So watch this. This is crazy, but the way this thing works, man. Okay, so now let's take the SPY, and we're going to put the SPY back on a much larger basis. And what you're going to see, the way this is laid down, is that if we get down to, you know, let's say the 181, I'm just gonna, because I have the volume characteristic right now beside the SPY too, okay, so you can see it. So you get a high volume low, folks, at 181.92. Well, if you get down there with volume, what that will set up is that's going to set up a 1560. It's not necessarily going to set up the 850, but it's going to set up the 1560. And we'll go from there. You know, the 850, you know, who knows?
No, I got you. And I'm not trying to put you on the spot.
No. Listen, man, it's going to be intriguing watching this thing, you know, play out. You know, the aspect that the October level itself is so dramatically lower that it's pretty intense. And it's like, I'm trying to figure out myself, why did the rails go down there first? Now, it's possible that the market sniffed out that the oil price was going to go down so dramatically that the rails took off, because the rails have already broken it. The large railroads have already broken that level. And, you know, they're down over 25%. So
listen, I brought up when the market closed on Friday, I think I looked and saw the IYT on a monthly chart, and it was like the first distinctive rollover lower close on a monthly chart, that gradual rollover in almost 3 years. So, I mean, I'm not calling to say that, you know, we're going to go super low, but I mean, it really is a heads up. If you look at the IYT on a nice monthly, very smooth chart, it's a really gradual rollover. And, you know, they say that transports lead the way. So
yeah,
it's kind of curious.
It's going to be interesting, man. And, you know, the last thing I want, folks, just so you understand something, I don't want to see that S&P go to 850. I mean, because that's like, what the heck's going to happen this time? Do you know what I'm saying?
Right.
You know, that's a fact. So, you know, we'll see how everyone handles the October, you know, 1800. If I gave you a percentage basis, the October 1800, man, I think we're going to hit it. I think people are going to be in shock. You know, that's so. And you know, if I've learned anything from large downdrafts, once they start, it can be trouble, man. You know, and the correlation, folks, that I come with this one right here, I will never forget. In 1994, we only had a 12 to 14% correction, and because we had been up for so long, people were going out of their mind. It was like, you got to be kidding me, man. But what happened is that the market had, well, it was 1996, rather. It was 1996, because the market had gone up from 94 to 96, about a year and a half, just totally straight, right? And in the spring of 96, the market pulled back about 12 to 14%. But what had happened, folks, is this, is that there's so many people that got complacent, and there's so many people that leveraged up, that 14% was enough to wipe people out. People got wiped out at 14%, which is insane. But
yeah,
it happened, man.
Well, it was the first time that I'm sure a lot had never, they were all geniuses and hadn't seen a draft then and didn't know how to trade.
Oh, listen, we're all geniuses in a bull market. There's no doubt, man. There's no doubt. Cooking, brother.
Hey, Tom, I appreciate it.
Okay, have a great one, man. Have a safe one. And, you know, it's what is intriguing, folks, in updrafts and downdrafts is this, is that at some point, when you've made a lot of money, and let's picture that you've been riding this market, you've been riding it good. I would suggest that you take a look at it and say, okay, if we go up 20 more %, how will I feel? Okay, and how much will I make? And am I cool with that? Of course, everyone's going to say, of course you're cool with that. Now just take that same scenario and say, if I'm down 20%, how am I going to feel? Am I good with that? And on the down the 20%, what you absolutely have to do is say, okay, and am I going to sell out at any point? Or am I just going to basically take the drive down and hope, as we did come back this time, that we'll come back once again? You know, what does happen is this, and this is where large accumulators of money, meaning the money business in general, you know, they buy, hold, keep forever. A buy, hold, keep forever strategy, folks, if in fact you're going to keep for 15, 20, 30 years, will work. The reason it has to work is this. It doesn't mean that you're going to buy more. But because of the, I don't care if inflation is 0.5%, 1%, 0.75%, over the course of that many years, everything's going to be more expensive. Okay? You know, I've talked about this a million times. When I was a kid, milk, bread, and cigarettes were 98 cents. Milk, bread, and cigarettes now are what? 20 bucks. Milk, bread, and cigarettes another 40 or 50 years from now, guess what? They're going to be $200. That's just the way it goes. The key is when do you need the money, and do you want to take that much volatility, and can you take that much volatility? You know, so the markets right now are in a very nice place if you take a look at your portfolios and you say, okay, I've done this. This is what I have. Where's my money management, and what will I do with the money when I take? In fact, the aspect of what you will do with the money if you take it out, and I've heard people say this many times, what am I going to do with it? What am I going to do with it? Guess what, folks? Keep it. Cash is king. Cash is always going to be king. And I suspect what plenty of everyone has found out is that it's more king than you can absolutely believe, because what tends to happen, even in this good economy, cash is king in an extraordinary way, because it's a lot easier making money when you do have cash than not having cash and have to borrow something in order to try to make money. So, bottom line, what that's going to be all about, that's going to be all about discipline and not wanting that extra 5, 10, 15, 20%, whatever it is. And I know that's going to be hard to do because of the fact that with every downdraft that we've had, you get an updraft afterwards, and everyone's been rewarded by staying in the marketplace. And hey, listen, the bottom line is that it's whatever the investor, you can be comfortable with. That's what it really comes down to. And knowing what your actual parameters are. We take a look at the, we go overseas for a second. We take a look at the DAX. DAX out here today. The reason we want to look at the DAX, went up extraordinary, folks, okay? The DAX was a rocket ship, okay? Non-stop, it went up from 9,400 up to 12,000. Those types of moves there, and then gives it up, those types of moves are basically market tops. So we'll see if, in fact, that is a market top, and that's what it's been saying in the DAX. But the DAX, you talk about a King Kong move, oh, man, that's about as biggest King Kong move you could actually have. So the DAX went up almost 50% in 1 year. Okay, that doesn't happen, folks. Well, it did happen, and then it's already given back 25%. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow up 64, NASDAQ up 22, S&P's up 9.5. We're going to be right back.
It's hard to believe that it's been almost 2 years since Andy Hecht started his newsletter, the Technomental Commodity Report. In that time, he's delivered many winning trades for his subscribers. To commemorate Andy's 100th weekly issue of his newsletter, we're rolling back the monthly price to the introductory rate of only $59. This is a one-of-a-kind special that is only around until Thursday of this week, which is the day of his 100th issue. By taking advantage of this 100th issue special, you can lock in Andy's original introductory rate for as long as you remain a subscriber. That's an incredible 25% savings every month off the retail price. Andy delivers in-depth analysis of the commodity market every Thursday in each issue of the Technomental Commodity Report, while providing specific trading recommendations on ETFs and option positions within the commodity market. Don't miss out on this special, as there are only hours remaining. Sign up for the Technomental fundamental commodity report right now at the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. So in the world of Europe, folks, in Europe, well, what you have is that the euro in general, Draghi, that is what was moving the euro today versus the dollar. What you had over in Europe, Draghi come out, was basically announcing a few different things. No big announcement, by the way, but just how he thought things were going. what that did is that that put some destruction in the dollar really quick. Euro went topside. Now, of course, we just know it's buying and selling. The dollar had come down big time yesterday with volume. Euro went up. Just coming across the tape here. So you get Draghi saying record monetary stimulus is filtering through the economy on schedule, and insisted that the European Central Bank needs to see its bond buying plan through to the finish. The asset purchase programs are proceeding well, the ECB president said at a press conference today in Frankfurt after officials kept interest rates on hold, and he unveiled new forecasts projecting a pickup in growth and inflation in the next 3 years. Reaching our objectives is conditional on the full implementation of our monetary policy stance. Since the ECB started its 1.1 trillion euro, 1.1 trillion euro, that's that's pretty amazing, quantitative easing program 3 months ago, the inflation rate in the 19-nation euro area has turned positive, though it remains short of the ECB's goal of just below 2%. The improvement in economic performance comes despite uncertainty created by the international creditor talks in Greece as that country flirts with default. You know what's amazing, folks, is that when he was out here this morning talking, so pitch how deviant the marketplace is. He's out here talking, saying that, hey, we're going to buy more bonds, we're going to put more money into the system, and what is that? What happens when that happens is that the euro actually goes up versus going down, the dollar goes down. The ECB policymakers expect the recovery to broaden, and domestic demand should be further supported by our monetary policy measures, Draghi said. The recovery is on track exactly according to our projections. The chief area of good news for Draghi is evidence that the deflation scare that helped usher in QE may be on the wane. The inflation rate in the euro area was positive for the first time in 6 months in May, rising 0.3% from zero. Core inflation, which strips out energy and food prices, was up 0.9, the fastest pace in 9 months. What's kind of interesting there when you look at that, energy did go down, and energy in Europe is really expensive. Food prices, though, food prices are expensive, man. That's the bottom line. When I look at food prices to me are already inflation, and you're not talking about inflation in a small way. I paid for lemons the other night. Was it 2 for $1.49? Give me a break, man. That's insane. We're in Florida. It's 2 for $49. Crazy. Anyway, presenting the latest round of forecast, Draghi said the outlook remains basically unchanged compared with his March prognosis. Inflation will be 0.3% this year instead of 0%, and that he thinks it will reach 1.8% in 2017. The way that I think we have what's happening in the U.S. right now, folks, is that we are coming and we're in some inflation when you actually look at the food structure. The energy structure, no doubt. This is really cool. I love how the gas prices have come down. It's pretty dramatic, actually. We'll see whether this the gas and the oil want to do an ABC structure on the way up, because the way they are set up right now, by the way, we very well could do an ABC structure up inside both the oil market and the gas market. In fact, I'll bring up the fuel right now. So we take a look at this. We pulled back today, but what you have is this. So we have XBN5. Okay, so this is unleaded gasoline. Unleaded gasoline wholesale right now is trading at 204.21. The A point on this is down at 166. The B is 202. So you got what? That's that's 36 cents. Your C is 192. So you're dealing with a 230, which is not the end of the world, a 230 gas price, if in fact we take that B point out with volume. The B point that we're talking about, we're at 204 right now in the unleaded gas. You take that out with volume, that'll give you a 236. You know, we're down off $3, of course, and it hit a low of 153. So we'll see how that does shake out. The oil market itself, what happened today out in the oil market, you're going to see that it pulled back. But the pullback, folks, was really on light volume and was pulling back against strength. So to me, the oil market's not done yet. You know, the oil market, when we take a look at the CLN5, what the oil market had out here today, we did 350,000 contracts. That is going against, though, the huge day of strength that it had on the 29th. On the 29th, we were going topside. I think it did like 450 or something. Yeah, 452. We did 452, and that, you know, that looks like you're building cause to at least test the swing high of that 63, 62. We'll see whether it can break it or not. Fundamentally, what you do have inside the crude oil market is that up there at that $60, $62 level, you have all these shale producers that will switch on the switch at about 65. So that will put some fundamental pressure on it, but it doesn't mean on a technical basis you can't do the full ABC structure on the way up. And that ABC structure on the way up would be 71. So we're going to watch real closely how it comes into the highs of that consolidation it's in. And if we came down again tomorrow with the same type of volume we did today, that still wouldn't change it because the volume is so extraordinary on the way up. What would have to happen is that would need about a 30% increase in volume on the way down. If we come down, and I suspect we are going to be down tomorrow, it wants to try to get into this 57 area. But I suspect instead of the 352,000 contracts you're going to be doing, you'll probably do 250 coming into it. What that would set up, higher prices. And particularly what we do know is that we're coming into the summer. Out there today, if you haven't checked it out yet, I haven't checked it out yet, but I'm going to as soon as we get off the air. Southwest, folks, is having a sale, and the sale is pretty dramatic. This fare is like $49, and they go out for quite a while. The website was down earlier once they announced them, but check it out. If you're going to go somewhere, might as well get that deal, folks. Beautiful thing. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow morning, 8 o'clock. Go get them, folks.